Back in the action once again. It's about that time of day again here, folks. It's Tuesday evening. It is September the 24th, 2019. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time today, please be aware I help traders find high-quality trade setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. My job tonight is to help you guys identify the best levels of support and resistance, the best entries and exit locations, and of course, the easiest traps to avoid so we can keep all that money in our account on tomorrow. That's of course Wednesday's trading session. So we're getting ready for Wednesday, and we got a lot to cover here tonight. We had some late developing news. That's why this video is a little bit later than normal tonight. I apologize for the late video. A lot going on at the end of the day. We'll talk about more of that here in a moment. We'll also check the calendar for tomorrow. Got a lot of news coming out tomorrow morning. We want to be prepared for that. And of course, we'll grab some charts. We got some oil, S&P, Nasdaq, gold, and we'll wrap up tonight on what is a very mighty euro. Now, I'm going to jump in here first tonight on the video with that black gold, that Texas tea, those crude oil futures, because boy, the bears had a field day all the way down to a big quadruple measured move. Now, a quad measured move, 4 legs down, always tells me pretty much exactly what to expect the following day. Let's dig into that oil chart, right? That Texas tea, those crude oil futures. And let's see what we have here on the chart here to kick off tonight's video newsletter. First things first, we know we are bearish here on the oil. Now, whenever I see a real strong move like this, I always know I want to go with the direction of this momentum. However, we might be a little bit done here now for these bears. We got 1 leg down, 2 legs down, 3 legs down, 4 legs down. Anytime I see a market go 4 legs down, I know that most people are going to look at this and say, this is way too low to sell, right? So I would imagine a lot of sellers down here are not going to be too excited about selling low right now. They're going to want to sell high. We know we're bearish, but we're too low to sell. And so what I've got to be careful about right now is because we are 1, 2, 3, 4 legs down to that quad measured move, most of the time, you're going to see these markets start to go sideways inside of a range, right? Nobody's going to buy this market because it's way too bearish, right? And nobody's going to take profit because obviously we're sinking lower like a weight right now. So that will usually produce a sideways range. The market will usually end up going sideways the following day. Now, to be honest with you, right, whenever I have 4 legs down, I look for that range, and anytime I have a trading range, I want to buy low, I want to sell high, and avoid the middle. So I'm looking for a potential range here, right, in the next couple hours, and with that trading range, I'm looking for opportunities here now to be a seller up inside that battle zone. I'm also going to be keeping my eyes open tomorrow if we do keep rolling lower, because sometimes, right, in those rare occasions, we'll keep bleeding lower here, right, as we go. So of course, we'll look at that as a spike in channels. Give me another plan to follow. So I'm anticipating a range for tomorrow, and if we can get that trading range down here, my goal, of course, is to sell up above the top of that range, because you know sellers aren't going to want to sell low down here. And we'll talk about a couple different patterns. I've got 3 different patterns to keep an eye on to be a seller. I'll also talk about if this thing keeps bleeding lower. And then one more thing too, what would a reversal look like, right? At what point could I buy this? You know, we're 4 legs down. There won't be a lot of sellers that want to sell down here, but what do I need to be a buyer on this oil? We're going to break that down into all kinds of small details here for you tonight on this video. So make sure you stay tuned if you're an oil trader here tonight. Over on the S&P got clobbered here this afternoon. We had some news come out of the White House this afternoon. We'll talk about more in just a few moments. But again, anytime we see this much movement, right, you can see 1, 2, 3, 4 legs down. We are way too low, right, to want to be selling right now. You can already see, right, that the S&P now has started going sideways here in that range. So this is probably a little bit of a glimpse into the future of what we're probably going to see on oil. Nonetheless, though, we do have a range right now on the S&P. We know we are bearish. Now, a range-bound market always tells me to look for sell setups above the range. I've got 3 different entry patterns, just like crude oil, right? We'll talk about how I want to sell high on this tomorrow. And of course, we'll also talk about how can you buy it? You know, is it possible to buy this type of market? There is. We're bearish though, so obviously I don't want to be too aggressive being a buyer, but I do have a plan here to pick those bottoms tomorrow. So we'll talk about that tonight on the video. And then obviously, right, there's always potential for a short covering rally. A lot of this today was because of some very sensational headlines in the newspaper this afternoon. Could this reverse back to that big round number? Absolutely it could. This could be nothing but a buy the dip scenario here for those bulls, and we'll talk about 2 specific patterns to be able to capitalize on that short covering rally. Over on the S&P tonight, we're going to grab the S&P here in a lot more detail tonight on this video. On the Nasdaq is very, very similar, right? You can see here some big moves lower on that chart. We're going sideways right now, right, in a range you can see. And again, think of this now almost like a little bit of a glimpse into the future for crude oil, right? We got that move down. We're going sideways now. We know we're bearish. We know we have a range here. Anytime we have a range with a bear bias to it, I want to sell up above the high. We'll talk about the specific entry patterns to be a seller. I want to buy underneath that low. The only challenge we have right now about that low is the fact that we're so bearish here, right? So we'll talk about how to buy right off of that low. Very specific entry pattern to be a buyer off of that low. And then what would a reversal look like? A possible short covering rally all the way back up to retest those highs. It's absolutely possible here for tomorrow, especially knowing why this market pulled back today, right? And then we'll talk about how to trade those breakouts, how to trade those reversals tonight on this video. Over on the gold's probably going to be the most difficult of all of the markets. We started off today inside of a really grindy little range here today. And then, of course, we had that spike, right? Anytime we see a strong move like that, you expect to see, right, another leg in the same direction. But you'll notice here right now, those bulls seem to be struggling. They do. They seem to be struggling here to retest those highs. That may be the beginning of the end here for these buyers. Now, whenever a day starts in a range, it usually finds a way back into that range. Now, with that said, this move higher here today was a very, again, it was on some news that came out this afternoon, and of course that news is one of the many reasons why ranges do get breakouts. So there is potential we may keep going here, right? We'll talk about some setups to look for to be a buyer. I'm also thinking we may go sideways up here, right? And we may start seeing some sideways chop. If we can hold this area and start going sideways, I'm going to start looking for buy setups underneath that trading range. But in the meantime, though, I'm looking for a way to sell this back down to that range. The problem is I've got that bullish momentum. And what's the best way to sell when the market is bullish and trying to push higher? Well, I've got one very simple reversal pattern, and I've got 2 patterns as the market collapses back down. So we'll talk more about that gold here in a lot more detail on the video tonight. So make sure you stay tuned on that. Then, of course, over on the euro continues to rotate higher here as we go. We talked about this, of course, last night on the newsletter, right? We get ourselves inside of a bull channel. And, of course, I'd like to be a buyer off the low of that channel. I'd like to be a buyer underneath the low of that channel, right? We'll talk about some specific entry patterns I'm going to look for on the euro here for tomorrow's trading session. I'm also watching for a possible range up here. We've got some resistance overhead as well, so we'll talk about how to handle a range. And then I'll tell you, there's a lot of open space overhead here. We've got quite a lofty target waiting up there around that 11,450. So what if this market keeps running higher here? What do we need to see here now to qualify a breakout? We'll talk about breakouts. We'll talk about pullbacks. We'll talk about trading ranges and the best ways to trade them on the euro. We're all ready to go, guys. Got the euro, the gold, the Nasdaq, the S&P, and of course that crude oil. But before we jump into the video tonight, I want to make sure to remind you, make sure you join our mailing list. You may not be aware of this, but just before I publish our video on our YouTube channel every evening, I send out an email to everybody on our mailing list. That way, whoever is on that mailing list gets the first crack, right, at this video newsletter every evening. It's very easy. I want to make sure that you get that email every evening so you never miss another great video. All I need is your name, your email address. Hit that subscribe now button, and don't forget, when you subscribe to our mailing list, your job isn't over yet. You still need to go in, check your email, because I'm going to send you a welcome email with a bunch of great goodies in there, and I need you to get that welcome email because there's a verification link in there that you need to click on so I can keep sending you that email every evening when our nightly newsletter goes live. So don't delay, right? Sometime here today, right? Grab that mailing list, get registered, check your email, and be aware, sometimes those emails, they get stuck in your spam filter. So if you don't see it in your inbox, check that spam filter. Also want to remind you too, if you have any questions about today's video, anything we talk about in the video tonight, I always encourage you guys to drop those questions right in the comment section below. And speaking of dropping some questions down there, is there any topics that you would like for me to talk about on this nightly newsletter, right? So if you have any questions about the video, or maybe you want me to address something or a specific indicator or a strategy or a pattern or anything that you'd like to see me talk about in the next edition of our nightly newsletter, guys, drop me some comments in the comment section below. And while you're down there in the comment section, do me a big favor tonight, will you please, and hit that thumbs up button for me, because believe it or not, every time you hit that thumbs up button on YouTube, YouTube rewards me by exposing this video to other traders. So help me share the love, help me share the wealth, help me share this strategy with the rest of the trading world. Everybody wants to learn a great strategy like our 3-step strategy. So please drop a comment in the comment section below with any questions you might have, and hit that thumbs up button. I always appreciate you guys helping me expose this video to more traders who are eager to learn it as well. And don't forget, guys, if the comment section isn't quite your bag, don't be afraid. You can always call that toll-free phone number in the upper right-hand corner, because I'm always here to help you guys out. So don't be afraid. Call that toll-free phone number. I promise I will not route you through some random call center somewhere. We're a very small family-owned business here in Los Angeles. My wife, Megan, and I are always here to answer the call, answer all your questions. That way you'll get the truth. You'll get the right. You'll get the correct information right out the gate, and you don't need to go out and search on Google, right, where things are less than reliable, as you probably already know. So call me if you have any questions there. Drop those comments in the comment section below. Hit that thumbs up button for me, and don't forget to join that mailing list so you never miss another great video. In the meantime, let's get this video going here, shall we? Again, I apologize for the late start here to the video tonight. We had a press conference coming out of the White House this evening regarding the impeachment proceedings of the U.S. President Trump. Whether or not that will actually happen or not, it is stirring things up here across the world, right? You can definitely see markets responded, and I'm eager to see how markets respond here in the next 25, 30 minutes as they open up in Asia. Now, I'd be lying to you if I said I know exactly what's going to happen next. I mean, the markets will tell us, really. They really will. You know, the wisdom of crowds, the markets are going to help us understand what's really going on out there. It's obviously very difficult to trust anything you hear, right, out of Washington, D.C. here in the U.S. or anything political, right, these days. It's very difficult to tell, right, what is real and what is not. But right now, the reality is we had a press conference at the White House. Nancy Pelosi got up in front, read the teleprompter, right, talked about God knows what, right, and markets will be responding here, right, in the overnight. I'm going to be watching closely at that response, because that will definitely tell us the truth of the matter. If the markets believe you, right, they'll go right, they'll go lower. If the markets don't believe them, right, they'll go right back up to retest those highs. I've got my opinion, but I'll let the market tell me tomorrow what direction direction I want to be using in this. Now, that is kind of the the unknown, right? The known unknown right now for tomorrow is how will these markets respond to this press conference this afternoon. What we do know for tomorrow is we got two major news events. We got the new home sales report at 10 a.m. Eastern time, and of course we got that petroleum status report at 10:30. These are the two big news events for tomorrow. That news report at 10 o'clock is probably going to be the meat and potatoes, so to speak, of tomorrow's trading session. So you definitely want to make sure you're paying attention around that 9:40 to 11 o'clock block tomorrow, ahead of and after that news report comes out. And then don't forget, we also have tomorrow's Wednesday inventory report. Keep in mind, on Wednesday mornings, oil, I always try to get to oil before 10 o'clock on Wednesday or after about 10:45 on Wednesday, 10:40, right? 10:45 on Wednesday. Now, I know what you're thinking, right? Why don't we try to trade those big volatile reactions? And the reality is the news reports are very unpredictable, right? You really can't trade based on the news. You've got to pick a direction. There's very little liquidity, which means a ton of risk. Yes, you can make some money off gambling off news reports, but the risk is so high because of the illiquidity and just the unpredictable nature, right, of economic news. Like I always tell you guys, there are so many times each week to be trading. I really don't like to participate during times that really threaten my livelihood, and that's the reality. You place the wrong trade at the wrong time in the wrong news event, right, and that news event will rip your account to shreds, right? That's a very dangerous situation. There's no amount of reward that I could earn off a news report that is worth me blowing out my entire trade account. And you're more than welcome to disagree on that with me, right? There are plenty of traders out there that go bankrupt every single day trying to predict news events. I'm not one of them, right? I'm not going to risk my account because, again, one wrong move, the wrong direction, an unlucky bounce, and your money's gone when you're trading around news. So what I do is I wait for the news to come out. Usually the market will be very slow after 10 o'clock on Wednesdays. I'm talking about oil again, just oil here, right? 10 o'clock on Wednesdays, I'll sit on hands. We'll wait for that news to come out at 10:30. And then usually by about 10:40, 10:45, we'll get back on the horse and we'll start looking for new setups on the oil. Again, this is only for the oil traders out there, right? One of the nice things about our trade room is that we're watching all of our big five markets. And so if I'm not trading oil at 10 o'clock, right, we'll go trade something else. It's one of the beautiful parts, right, of this three-step strategy. Now, don't forget, tomorrow morning, speaking of trading strategy, we open up every morning at 8 o'clock Eastern time, and we're going to execute this plan together. 10 o'clock news tomorrow, 10:30 news. Those are the known, right? Those are the known reports tomorrow. The unknown right now is what will develop tomorrow, right, after we hear from Nancy Pelosi tonight. Tomorrow, what will happen, right? Will the markets believe her, or will the markets basically say what they've said every other time they've tried to talk about impeachment, and that is not a chance? Again, I have no idea either. We'll see how these markets respond. And so a lot of what we do tonight is kind of putting ourselves in a position right now of knowing what we know, but being open-minded to things may change here, right, in the next couple hours. Now, we got a lot to talk about tonight. We got some crude, some S&P, some Nasdaq, some gold, and of course that euro. I'm going to jump in here first here on the oil. Like I mentioned earlier, oil is one, and somehow I deleted that third one in there, right? Oil, of course, right? Oil is 1, 2, 3, and 4 legs down. Now, I never like to say never, but I'll be very honest. When we go 4 legs down, we usually have a very hard time going any further until we see a very deep pullback to allow those sellers to sell high. You got to remember, when a market makes 4 legs down, nobody's going to want to take their profit, because they're going to hope this is going to keep going. At the same time, nobody will want to buy this because we're so bearish. And so what happens most of the time, right, most of the time, is that when a market goes 1, 2, 3, 4 legs down, we're going to start going sideways down here, right? There'll be some sort of range. Now, you'll see on the S&P and the Nasdaq, right, the range might be up here for all I know, right? I was very tempted to call that the trading range. So that might be our trading range tomorrow. I don't know enough about it yet. All I know is I'm anticipating a range down here. And then when we do get that range, that's when I can start to structure my trades correctly. For example, we know we're bearish. In a bear market, right? In a bear market, I want to be a seller up at resistance. So assuming now we find a range here, right? I've also marked up the lows, right? I've marked up these two lows to find that trend line. I brought it up to that high, marked up those highs, and now that gives me a nice resistance area that hopefully I'm going to be able to use in combination with, right, that trading range, right? So imagine we start going sideways here in the overnight. I can now use that range, right? Ranges tell me to sell high. I can use the combination of selling above that range along with my sell zone, which is pretty easy to see here, right? You get a prior swing low. That has been used a couple times as resistance, and I've got that hidden channel right as we go. So we know we're bearish. I'm anticipating a range, but all I really know right now is I want to be a seller. I just don't want to sell this low. What I'd like to do is I'd like to get a nice bounce up off of this low, right? Get some profit taking here from those sellers, because if I can get up inside my sell zone now, I'll bet a lot of buyers are going to think this market reverses, and they're going to try to buy that pullback off the moving average. Now, once those buyers, once they try to buy that pullback, now we know exactly where their pain points are. Now we know right where their stops are, and now we can sell directly into those stop losses. What I always look for is a failure pattern, right? As those buyers try to buy above the moving average, then I look for that pullback pattern that comes thereafter. This is one of my favorite combination setups. It's a failure into a pullback combination. So again, strong move down, too low to sell, way too low to sell right now. I'm going to wait for that profit-taking rally, get back above that moving average, right? Get into that sell area, the top of the channel, and that overhead resistance trend line at 41. Look for those buyers to try to reverse this, and then look to be a seller, right, into those stop losses. Because again, it's not a bull market, right? And buyers who try to buy off that pullback, their stops are a sitting duck to get hit and run back lower. Now, hopefully, we'll get that failure into that pullback combination. That would be the ideal, right? The failure into that pullback combination. That would really be the ideal. We may not though, right? It may just collapse right back down to retest that low. So keep that in mind, right? Keep it in mind, a pullback, a failure, right? And then again, that pullback if we get lucky, right, on that combination. Failure pattern, right? Buyer failure into a seller pullback pattern. Now again, if we start going sideways down here, right? We start going sideways. The plan doesn't change very much. We still want to go up, get above that range. Remember, ranges tell me to sell high, wait for those buyers to try to buy that pullback, and then we can sell right into their failure. Okay, that's another great setup. That will obviously be including that range, which I do expect to see tomorrow. Now, if we do get the market, for example, let's say we go back in and we start going sideways here, right? Let's say, for example, right, we start going back in and we start going sideways. I have no problem. I've got no problem with that being my trading range, right? No problem. Now at that point, though, you want to go up, let those buyers try, buyer failure, and back down. So be flexible with this range, and you'll see what I mean on this when we get to our S&P and the Nasdaq as well, because the S&P and the Nasdaq have that big range right in the middle. So if we do end up going back up into that trading range, I have no problem with this being the range. Just look for that buyer failure pattern, and we'll sell up above the top of that trading range. Pretty easy, right? Pretty easy idea there. Now, what if we keep going lower? Right? What's the plan if we keep going lower here? If we keep going lower from here, it's usually going to be either a channel or a wedge, right? It'll either be a channel, right? It'll kind of grind its way lower, or it'll be a wedge and it will kind of grind right into a wedge down here as well. Now, at this point, we are uber bearish, but we're also very, very low on that chart as well. So instead of trying to sell it as it goes lower, if this thing continues here to grind lower here, right, whether it's a channel or it's a wedge, the plan really doesn't change very much. I want to see us get up off that low, get those buyers now to try to buy that pullback so I can then look to sell into their stops, grab that pullback, right? Grab the moving average as it comes over, right? And sell it back down from there. So failure into pullback from there. So if it does keep going sideways, the plan really doesn't change. I just got to wait to get up off these lows, right? And be a seller up off the low. The one thing we haven't talked about yet tonight, though, is a reversal. What would a reversal look like? Now, first of all, remember, every time we've gotten above that moving average, the buyers have tried to buy it and they failed. Every time we get above that moving average, the buyers have tried to buy it and they fail. So remember, just because we get a move higher here does not mean this is a reversal, right? For all I know, we move higher, the buyers will try again to buy the pullback, and we'll get another great shot to sell it right back down into that trading range. But what would a reversal look like? First, strong move up. Second, pull back to the moving average. Third, jump off the moving average. Okay, I call this a 1, 2, 3 reversal. 1, strong move up. 2, pull back to the moving average. 3, strong move off the moving average. Once we have that 1, 2, 3, mark up that high, mark up that new trend line, create your channel, and now you've got the sweet spot, and now we look for that buy now off the low of that channel. I call this a 1, 2, 3 reversal into a hidden channel pullback. Where's my target? Target's back up to retest that high at 58.49 from earlier on today. So at this point now, we've covered pretty much all the bases. We know we're bearish. We want to be selling with that buyer failure into bear pullback. We know not to trust a pop higher here, right? Sell into it. We also know the plan if the market keeps grinding lower. Stay patient, and we know what to look for a reversal. Now, if you're here for the first time right now, this might have gone right over your head, right? It might have been way too much information in a very short period of time. So if you're here for the first time, what I'd love to do is encourage you to take our free trading course. In the upper right-hand corner, I'll put a big link up there. It'll pop up there right now for you to grab that free trading class. The free trading class, you'll learn all my favorite terminology, the 3-step strategy, my favorite entry setups. By the time you're done with that free trading course, you'll be able to make the most out of our time together every evening on this video newsletter. Not to mention, you'll learn the same strategy that I trade every morning with all of our clients in the trade room. So don't delay, pause the video. I'll be here when you come back. Grab that link in the upper right-hand corner and get registered as a brand new member of our free trading classes. And also, please be aware, if you're on the website right now, I'll put a big red button right below the video tonight on the blog at Sideways Markets. If you're on YouTube, all the links are in the description, right? If you're on the website here at Sideways Markets, it's a big red button below the video tonight on the blog. Let's keep going here. Now over to the S&P. As we open up in Asia, what do we know about the E-minis right now? First thing we know is we're bearish. Second thing we know is we're inside of a trading range. We know the market's bearish, but much like oil, 1 leg, 2 legs, 3 legs, 4 legs down, we are very, very low on this chart right now. I want to be a seller, but I don't want to sell low. I want to be selling up, right, up at levels of resistance. Now, in this case, you'll notice we've already got the benefit of that range. What I can do now is I can take that trading range, I can factor in my sell zones overhead, and I can define my buy zones underneath. This is the information that we don't quite have all the way yet, right, on the oil chart yet. So oil's a little bit of a waiting game on this. We'll play that by ear tomorrow, obviously, in our trade room. But right now on the S&P, we know what we have, right? We know what we have right now on that chart. It's a bear market into a trading range. And really what I want to do is I want to make sure I avoid the middle, right? I call it no trade zone. I want to buy low, right, in that support area, and I want to sell high. Now, let's talk about how we can do this, because we know we're bearish, so I want to be a seller. I've also got what I call a expanding triangle trend line, right? A kind of a rising resistance trend line. That's a level of resistance above overhead. So how can I sell in this market right now? What would be some easy ways, right, to be a seller here? Well, first of all, I'd like to see us go up into that sell zone. I'd like to see these buyers try to buy a pullback. And I'd like to be a seller right into their stop losses for a failure pattern into a pullback pattern, right, going higher. Now, some food for thought on this. If we go up to that trend line and then pull back to that moving average, there's not a lot of bullish momentum here, right? And we should be able to be a seller into that failure and back down into that trading range. However, if we get above that trend line, right, up inside the secondary range expansion area, now that momentum's going to be quite powerful. And whenever we have that much momentum, I know the buyers in this case, they're probably not going to give up that easily. So if we really shoot higher, get through that trend line overhead, the only way now that I can feel confident being a seller is if I let the buyers, not just once, but try twice now and then look to sell into those stop losses. Now the same is true, right, as we go lower, right? As we go lower, I want to be a buyer going back up. However, because we're so bearish, I don't want to just blindly buy it. I want to wait as we go lower, wait for those sellers now who have control of this market, wait for them to try once, to try twice, and then we can buy back up. Okay, quick recap on this, right? Quick recap. A small breakout higher, I can sell into a buyer failure, right? Buyer failure into bear pullback pattern. I can sell, right, into those buyer stop losses and sell the rip as it goes back down into that trading range. But if it pops, you know, and again, the news that came out here a few hours ago, the market may not believe it. Right? And it may reject it and go back to that 3,000. If it really rips higher here, the only way I can try to sell it now is with one try for the bulls, two try for the bulls. And the reason why this is slightly different is because momentum is a little bit different, right? Momentum will be a lot stronger. And at that point, I can be a seller. But again, I got to stay patient. Right? If it really rips going higher here, I don't want to just sell it because we're overall bearish. Wait for once, wait for twice, right? Get them trying to buy off that moving average once, twice, and we'll sell it back down into that trading range. The same thing is true if we go lower, right? If we go lower and I want to be a buyer in a bear market, I've got to respect those bears. Let them try once, let them try twice, right? And I can be a buyer now going back up from there. All right, guys? So just remember that when you want to reverse that trend, right? When you want to buy underneath a range, you want to let them try a couple times before you try it, right? You can see here, for example, back here, right, as the market goes lower, see how they try once? You can't really see it very well. It's a much slower time frame we use for day trading, right? Once, twice, and then back up from there, right? We go down once, twice, and then back up from there. We go down once, twice, and then back up from there. We just don't want to trade inside the range, right? So get in before you get back into that range. Now, what would a breakout look like here? How about a breakout? Breakout pattern, 1, 2, 3 breakout? Absolutely. 1, 2, 3 breakout. Mark up the high, find the channel, buy the pullback to the low of that channel. 1, 2, 3 breakout into hidden channel pullback, right? That's the term we use to describe it. And then there's actually one more pattern as we run higher, and I call this a 2 try breakout. First things first, got to be a strong move up. clear right on above that trend line, right? It's going to feel like it's never going to come back. Wait for profit taking, get a higher high, bears try to sell it. We call this a two-try breakout. The first pullback is usually just profit taking from the buyers who bought the breakout. The second pullback is almost always going to be a trap high, right? It'll be a little trap high there, and those are sellers, right? Those are sellers coming in and selling high. Once you've got those bears trying once, trying twice, now all we need is a nice strong signal candle, and we can buy this puppy going right back up to that big round number at 3,000, right? So that's a two-try breakout pattern. Okay, now, how about as we go lower? Right? What's the plan as we go lower, right? If it goes lower, we have quite the wide open space down here. In fact, I think the next big milestone is down around 2,900. There's not a lot if you look left, right? So this could tumble pretty quickly here, again, if the markets believe the headlines from late this afternoon. First of all, though, what do we need for a breakout? The 1, 2, 3, right? It's not enough to get a strong move down. We've got to hold that pullback. Remember, guys, if sellers wanted this price lower, they would not be going sideways, right? So we know whenever we see a range down here, that means sellers are rejecting those lower prices. That is what's happening. If the sellers wanted this market lower, we'd be lower right now. So if I get this market running lower here, right, I can't just blindly sell it. In fact, I'll be looking to be a buyer. One try, two try, back in, right? What we call a nested failure pattern, right? We call those nested failure patterns. They're a failure inside of a failure, right? And again, like I said earlier, you can learn all of these patterns by grabbing that free course linked up in the upper right-hand corner. 1, 2, 3 breakout. 1, 2, 3 breakout. 1, 2, 3 breakout, right? 1, strong move down. 2, pull back to the moving average. 3, strong move off the moving average. That strong move is critical to qualify that breakout. Mark the low, mark the trend line, find the channel, and sell off the high of that channel. Now, if we can get this break down, what we'll do is we'll start counting legs, right? 1, 2, and we'll look for another 4, possibly 4 legs down. We're probably not going to go 45 handles down to that big, 2,900, right? We're probably not going to make it down to 2,900 tomorrow, right? That'd be pretty ridiculous, but we definitely may get 3 or 4 big legs going lower and really do some damage there, right, for those bears. So the S&P is looking pretty good right now. Again, like I said earlier, it really kind of all boils down to, do the markets believe, right, what they're talking about on Capitol Hill right now? That will be the big test here for tomorrow. Over on the Nasdaq is in a very similar position here. We know we're bearish. 1, 2, 3, 4 legs down. We know we're very, very low on this chart. We know we really don't want to sell this low. We want to be a seller, but we don't want to sell this stinking low, right? Way too low to be a seller. We know the market has rejected lower prices, right? Because that's the only reason why the market would go sideways here. Clearly, the sellers are not taking profit yet, or else the market would be rallying higher. And clearly, nobody feels comfortable selling down here for the most part because we're too low to sell right now. And I'm sure a lot of people looking at this going, let's see how the markets respond, right? See if the markets actually believe, right, there's any legitimacy to the claims being made out of the White House this afternoon. So it's very much a wait and see right now. We know we're bearish. We know we're into that trading range. And of course, range-bound markets tell me the exact same thing every time, right? I want to buy low. I want to sell high, and I got to avoid that middle, right? The no trade zone's right in the middle. We know we're bearish. We want to be a seller up at a level of resistance. I've got my trading range marked up here. I use that range to find my sell zones. I use that range to find my buy zones. Right? Pretty basic so far. And don't forget, you'll learn a lot more about these range-bound markets, how we trade them properly. You'll learn all the details inside that free course I mentioned, linked up in the upper right-hand corner for you guys here right now. I've also got my trend line coming in overhead, right? I'll be very honest with you guys. I really love these expanding triangles around ranges. So really keep that in mind here as we go, right? Think about that trend line now as a level of support, right? Think of that trend line now as a level of support, right? Love me some expanding triangles around ranges, okay? Because what I can do is I can sell high off the high, I can buy low off the low. Obviously, with a bear market, I'd rather be a seller. So I know where my resistance levels are overhead. I want to go up into resistance. Look for those buyers to try to buy that pullback off the moving average. It is not a bull market. It's not even a trending market at this point. It's a range-bound market, and most range breakouts will fail. Right? I know that rookies, because I used to be one a long time ago, but I was a rookie for a while, right? I used to love trading breakout pullbacks. The problem is a counter trend breakout pullback is not a reliable trade. Most of you have probably already learned that lesson the hard way. And because of that, I'd much rather put my sell order right where those buyers get into pain, right where those buyers get stopped out, and sell it right back down into that range. Now, like I mentioned earlier, though, on the S&P, if we do spike and get above that trend line, that momentum will be something we have to respect. Right? It may not be a full reversal yet, but it will be something you need to respect. And because of that momentum, you want to let those buyers try a couple times, right? If it's a relatively shallow pullback, I'll just simply sell right into that first, right? Those buyers pullback. But if it's a very strong move up, let the buyers try once. They're probably not going to give up after the first try. They'll probably try again. Okay, and if they do try again, now we know where they're right. Now we know where the real pain begins. The aggressive traders are already in. The conservative traders are in now. Now we know where their pain points are, right? And now we can sell into those stops, and then again sell that pullback as we try to make that run going back down into that trading range. Remember, you don't want to trade inside the range. You want to sell above the range, buy below the range. How do we buy it, by the way? We buy underneath the range, find that level of support. Because we're overall bearish, make them try twice. One try, two try, and back up. Remember, when you're trying to go against the momentum, you've got to give, in this case, the sellers who have control of this market right now, you've got to give them the benefit of the doubt. They're not going to give up after one try. Okay, they'll try twice most likely, then the market will rally higher. It's a much more reliable entry from there. And then what's a breakout look like? Breakout to the upside? There are two potential breakouts to the upside that I can see. One will be the 1, 2, 3 breakout. Mark the high, draw the trend line, create the channel, right, and buy the pullback off of that channel. The target now is all the way back up to the high of day from today. Or we see that strong move up, very strong, right? We call this the 2-try breakout. The bears, of course, try once, which is really just profit taking from the buyers. Higher high, this is usually where sellers will come in and try to really sell into that, right? Basically selling into buyer breakout pattern there, right? We don't want to try to, right, to sell that. We'll wait for those sellers to try. That's 1 try, that's 2 try. Now we know the buyers took their profit and they'll have to get back in. We also know sellers now have their stops most likely sitting right above that high, and I can buy now, right, blasting, right, literally right into those stop losses. You know, think about this pattern, right? It's called the 2-try breakout pattern, right? The buyers take their profit first. So when they see this market jump again, most buyers who bought that breakout, they're going to jump in again, right? It's one of the biggest reasons why I like to use 2 tries. Is because with a first try is usually profit taking. When we get that blast higher again, everybody who got out of their positions, they're going to jump right back in again, right? We also know those sellers who are trying to sell into this move, their stops are sitting right above that high. So we've got buyers chasing after it. We got sellers getting stopped out left and right, and that will fuel that move going higher. And again, that move, right, that target will be back up to retest those highs up around that 7,900 area on the Nasdaq. As we go lower, our next objective is down around that 76.16. I'm looking for a 1, 2, 3 breakdown. Mark the low, find the trend line, define the channel, sell the high of that bear channel. I'm not too keen on a 2-try breakout. If you do get that 2-try breakout, I would say look for a trap pattern, right? Make sure it's a trap high, just because we are so low on this chart. So as we go lower, could I use, obviously the 1, 2, 3 breakout is my go-to. Okay, and I really don't want to sell low because we're already very low, right? So I use the top of that channel. But if we do get that strong breakdown, right? Real strong breakdown, again, the bears will take profit. The buyers will then come in and try to buy it. It's that trap high, right? It's that trap high that will make you the money, right? That's the one you want. And again, it's kind of a fail safe, so I'm not selling right at that low of that move going lower. All right, guys, those are 2 sell patterns as we go lower, and we know where our targets are down on that 76, right, 16 and change down there. Again, a lot of this has to do with what goes on the next couple hours. It's very, very similar here to the S&P. And of course, tomorrow morning, we'll be executing the plan together with all the members in the trade room. How about some gold here tonight? Now, gold out of all of these markets is probably going to be the one that will take the most amount of discipline tomorrow. This market feels very bullish, and it really is very bullish. But we have to remember the day started off here as a range. And whenever the day begins a range, it's usually pending any big changes. Now, we did see some sensational headlines. So, when we talk about ranges in our video course here at School of Trade, one of the things I always talk about is that most range breakouts fail. But there's a couple scenarios that will likely produce a range breakout. One of them being a news event, right? A political announcement, a natural disaster, right? If something happens that changes the opinion of value, well, then we will get a breakout. And so you can definitely see we got that breakout here, right, on that gold. Now, anytime we see a very strong move like this in one direction, we know that we don't want to even try to sell into it, right? Unless we see, of course, right, that pull back, 1, 2, and you'll notice, right, the seller's got a nice little scalp, right, off of that 2-try failure. Now, honestly, I don't think I would have taken that short. That's a lot of strength, right, going higher there and clearing way out of that range. What my personal opinion would be, anytime you see this much strength, look to buy a pullback and run it back up to retest the high. And what you can do is you can grab that trend line, draw it off the lows here, right, and then literally look to buy that pullback, or in this case, buy that seller failure off the moving average going up, right? That is a much more reliable trade on that because of that incredible momentum as we're going higher. Now, at this point though, those buyers should have no problem retesting that high. And you can see they are really struggling to do that. And I think that's the biggest clue. I think when you look at where we are, when you look at how the day began, and the fact that they couldn't retest that high, at least not yet. As I'm recording this, they just opened up in Asia. It looks to me like they're going to fail to retest the high. Now, that may change, obviously, right? But that's what it looks like here at this point. So I'd like to be a seller on this now, right? Knowing that this market is struggling here, right, to retest that high, I'm looking for one very specific reversal pattern, and that's called a crown reversal. What I'm looking for here is I want to see the buyers try twice on the next pullback with a trap high. That's going to be my go-to reversal pattern. And ultimately, as we pull back, you want the buyers to try once, you want the buyers to try twice. You have to remember, you're going to probably see a lot of buyers buying as this thing pulls back right now. What I'm hoping is I can get a trap high here, right, to sell that sucker back down. Now, another way to look at this, and again, we call that a crown reversal, right? Crown, like a king or a queen, right, with a crown. And of course, again, as we go up, we know we're bullish. The only way to really sell in a bull market is to let them try once, let them try twice. In this example, though, because of the sensationalization, right, in the news media right now, I'm going to be a little bit more cautious about trying to pick a top here on the gold. And because of that, I'll look for what I call that crown reversal. Right? 1 try for the bulls, lower low. 2 try for the bulls, trap high, nice strong signal, and we'll sell it down from there. Now, we may also see the market collapse. Okay, and you want to think about what would be some options here, right, to sell it as it goes lower. First of all, 1, 2, 3 breakdown, right? 1, 2, 3 reversal. Mark up the low, mark up the trend line, find the channel, and sell off that channel high. That's a great option for us tomorrow. Or we collapse back down. Bears take profit. Buyers try to buy. Trap and go. Right? Kind of like a crown reversal, but it's a 2-try breakout with a trap. Why a trap? Because that range is right below us. And trap patterns are my favorite way to really protect myself against buying high, or in this case, selling too low. So 2 patterns, right? 2 patterns. Again, we're seeing them struggle to retest those highs. We began inside of a range. 3 patterns, right? One is that crown reversal, that trap high and back down in. 2 is that 1, 2, 3 reversal, right? That is the easiest of all 3 of these. 1, 2, mark up the new channel, and we're selling off the high of that channel. Remember, don't sell inside the range. Sell before you get to the range. And then speaking of which, strong move down, profit taking from the bears, lower low, right? Buyers come in. I want to avoid selling into that range. I look for a trap high to give me the best fighting chance, so I'm not selling so close to that trading range environment. Those are my 3 sell setups as we go, right? And if we end up back inside that range, let's say for some crazy reason the market just collapses, right, back into that range and starts going sideways again. If the market collapses back inside that range, now it's a bear market, right, into a trading range. What do we do with that? We sell high, 1 try for the bulls. Buyers try to buy the pullback. We sell into their failure. Do we buy off the low? We can with what? A nested, right? We go lower. Bears try once, bears try twice, and back up. Again, how do you know which pattern to use? Momentum. Right? Momentum is the secret. And I'm not talking about a MACD or an RSI indicator. I'm talking about the velocity of the market. What direction is it moving? If we end up back into that range, this will be a bear market. And because of that, I've got to let those sellers try a couple times before I can be confident to be a buyer going back in. I can be a lot more aggressive being a seller above that range top. Now, there's one thing we haven't talked about, and that is, what if it goes higher, or what if it goes sideways? I think a sideways range up here will probably be the more likely if we don't end up getting that reversal back down in. So think of this now as a bull market. You know, next couple hours, we go through Asia, we get closer to the opening bell in London, and we're just going sideways here. At this point, the buyers will have proven to us that they approve of this price, right? If they hold up around these highs, right? Buyers who take profit are quickly absorbed by buyers who want to buy the low, right? And the market will go sideways. If you're an old school trader, right, we call that accumulation and distribution, right? We see buyers accumulate it as it goes lower, right? Those buyers then turn to sellers as they distribute, right, those contracts as the market goes higher here. They're buying as it goes lower, taking profit as it goes higher. So we know the market is more bullish than bearish at that point. And my favorite thing to do is I always look for, first of all, I look for that seller failure, wait for it to go lower, get those sellers to try to sell off that pullback and buy right into those stop losses, right? That's my preferred pattern, right? To buy underneath that range. You can see a great example back here, right? Got your range. We go lower. The bears try to sell it, right, and it pops right back up. So think about that same pattern now below the range tomorrow. And then we may also keep going higher, right? So what would a break higher going? Well, if we go higher, where are we trying to go? Measured move. So if we do go higher here, where's our target? Target's up around that 52.3. Okay, now that's important because we have to know where we're trying to go. That way we know what pattern to look for. So for example, 1, 2, 3, break higher, mark that high, mark that low, buying off that channel. Target is up at the measured move. Okay, if we get that strong move up. 1 try for the bears, 2 try for the bears. Again, profit taking first. Sellers come in. We know where the stops are, and we're buying into those stop losses now, right, off of that 2 try pull or that 2 try breakout pattern. Now, if we really run and then we pull back, now we're running out of open space. You want to look for a trap. This is why I said it's very important you know where we're trying to go, right? Because if we're trying to get to that measured move, okay, I can get long buying a pullback. Absolutely, right? I can wait to buy a pullback here off the low of that hidden channel as we go higher. But if this thing just launches up, right, I don't have much space left over. And because there's not a lot of space up there, I'm looking for a trap, right? Trap patterns are always my preferred pattern whenever I'm concerned about buying high or buying into resistance or selling low and selling into support. And guys, don't forget, I'm just simply marking up the screen right now. If you want to learn a whole lot more about these entry patterns, grab that free course linked up in the upper right-hand corner, because not only will you learn the patterns, but you'll see hundreds of examples of how we apply that strategy to our favorite futures market. So definitely check that out there as we go. So we're looking pretty good here on the gold. We got some sell patterns ready to go. We got some buys ready to go. Now it's just a matter of time to wait and see what this market wants to do here. Over on the euro. Okay, euro wrapping up tonight is obviously bullish. The thing we have to think about on the euro right now is, look, every time it goes below that moving average, it keeps getting popped right back up. Okay, you'll notice that every time they make a new high, they pull right back. Right? See that? Okay, so every time they make a new high, they're pulling right back. Every time they pull back below that moving average, at least ever since the beginning of this week, right, we're seeing those sellers fail. So we know we have a very strong run higher here. We know the market's bullish. I want to see the market pull back to that low of that channel, right? Pull back into that buy zone. I want to buy nice and low, because every other time it's pulled back, right, we've had buyers waiting eagerly there, right, to buy on that dip. So we know we're bullish here on the euro. Euro's probably the easiest of all the charts. It's a nice, easy bull channel. I want to see that pull back. Once we get that pull back, think about those bears now coming in, selling off the moving average. Where's your stop? We're buying into those stops. We're buying that pullback. Right? Good example of that same failure pattern right back there. Right? We pull back to the low of that channel. The bears try to sell it. We know where their stops are, right? And we're buying into those stops. Right? You'll notice sometimes we don't get the pullback pattern. Hopefully we will. Right? Hopefully tomorrow we'll get the failure and then into that pullback to ride that momentum back up to retest the high. Now, what if we drop all the way down to the battle zone now? If we drop all the way below that channel, now what you want to think is, right, is let them try twice, right? Once, twice, and buy up from there. So if we really collapse here now, don't just assume it's a bear market. Assume now the bears are going to try a couple times, right? Let them try once, let them try twice. Then we can look for that failure into that pullback combination. So as you can see, it's relatively important how deep that market pulls back. If it's a relatively shallow pullback, I'll use your regular failure pattern. If it's a really deep pullback, we'll use the big guns, right? We'll use the more conservative pattern, because again, you've got to respect the momentum of that market. Now, we may also go sideways up here. So keep your eyes open here, guys. If this market starts to go sideways, it already kind of looks that way right now. We'll see if it continues. But if they keep going sideways here, remember, once we have that range, then we can use that trading range to find our buy zone down here, right? I don't have that information yet, unfortunately, right? So all I can do right now is anticipate. If we start going sideways, I'll take the size of that range, and I'll use that range, right, to find my level of support down here. And obviously we'll do that together tomorrow morning in our trade room. The bottom line, though, is anytime I see a bull market into a range, I want to see that pull back underneath that range, get that moving average coming underneath, get some sellers trying to sell off the moving average. It doesn't need to be dramatic, right? It can be something as small as that one, or as dramatic and large as that one, right? They all come in different shapes and sizes. I'm just simply illustrating what I'm looking for tomorrow. You can see lots of examples directly from the charts we trade in our trade room, right, in that free course that I mentioned earlier. And again, looking for that failure, going back up, right, into that trading range. Bull market into a range. We're balanced, buy underneath that range using a seller breakout pullback failure. Right? Let those sellers try to sell that breakout pullback pattern. Most breakouts are going to fail and go right back up into that range. I'd much rather be on that side of the market. And then last but not least, what if we go higher here? What if we go higher? Well, first of all, where are we trying to go? It's always very important we recognize where we're trying to go. If we do go higher, it looks like we're going to be going right up around, that range, right? That's the range we had from earlier on this month. That's where they're trying to go. So if we go higher here, and if it's very important you know where they're trying to go here, again, one would be if we hold and go and jump, I can use that right away. Mark that high, mark that low, mark that channel, right? And buy the low of that new channel, right? That is a great pattern setup. We'll see if we get it, but it requires a very strong break higher here to find that channel. Or do we see it jump up? Profit taking, higher highs, sellers come in, right? Let the bears try once, let them try twice. Now, you're not going to need a trap low on this because you got plenty of space up there. But if this thing really ran and then you got the pattern, you would want to trap on that, right? So again, as we go higher here, right, the buyers take their profit. That's the first pullback. The sellers come in and try to sell it. Now we know right where their pain is. Now we know where their stops are. We need to see those sellers try a couple times up there because we need those stops to be nice and juicy to buy right into them because that's going to be our fuel, right, as we run higher here. As you can see, a lot of the same patterns, just in different ways, right? Most traders are like that, okay? Not many successful traders that I've ever met have a lot of different type of setups, okay? You don't want to be a master of everything, right? You don't want to master everything. You won't, right? Just master a couple key setups and just work them over and over and over again. Last but not least, how do we turn bearish? Very strong move down, first of all. Pull back to the moving average, second. Third, jump off the moving average, right? 1, 2, 3 reversal, mark the low, mark the trend line, find the channel, and we're selling off of that channel. Now, where's my target at that point, right? If we reverse, those bears are hunting for a retest of those lows down around that 10,350 area. So that's going to be our target there for those sellers if the bears, right, if they can take control of this market here for tomorrow. But that is a very big if right now. So buy those pullbacks. Remember, the strength of the pullback determines the pattern that we're going to use. And speaking of the pattern we're going to use, don't forget, right, tomorrow we open up our trade room every morning, 8 o'clock Eastern time. I want to see you there with me, right? We'll see how the markets do overnight. We'll probably have to adjust our charts a little bit. I can't imagine the markets will just ignore all the headlines we're seeing in all the newspapers right now. So we'll update our charts tomorrow morning. We open up at 8 o'clock Eastern time. We'll do a quick prep up, right? Get prepped up, and then we'll trade that strategy together. Now, guys, it's very easy to get registered. If you're on the YouTube channel right now, I'll put all the links for registration for the trade room tomorrow morning. I'll put them right in the description of that YouTube video. If you're on the blog right now at Sideways Markets, just look right below the video tonight. There's a big blue button right below the video tonight on our blog at Sideways Markets. Or if you're here on the website at schooloftrade.com, it's the advanced course right below my ugly mug, right? Grab the advanced course to get registered for tomorrow morning's trading session. And if you're not ready yet to be a member, that's fine by me as well. Make sure you learn the trading strategy by taking that free trial. If you have any questions about anything we talked about today, do not be afraid to call that toll-free phone number or use that live support tool right below me here tonight on the video. And in the meantime, again, I apologize for the late video here tonight. A lot going on out there in this crazy world we live in. Hope you guys had a great day today. We'll see you tomorrow morning at the opening bell. If not, come back and see me again next time, tomorrow night, in the next edition of our nightly newsletter. Guys and gals, my name is Joseph. Again, be well out there. Be nice to each other, will ya? And be here next time with me, guys, on the next edition of the newsletter. Adios, amigos. Bye-bye for now.